Today, Bitcoin slips to $98,000. David Sachs lays out his priorities as Trump's crypto and AI czar. And Steve Yun of TVM Ventures discusses the kind of crypto startups he'll back with his new $100 million fund. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies are in the red this morning. By noon Eastern, Bitcoin slipped about 1%, trading right around that $98,000 mark. Ether slipped 0.7% to 27.71, and XRP dropped more than 6% to $2.46. Okay, let's get to a lot of news out of Washington with regard to crypto regulation. On Tuesday, the White House crypto and AI czar, David Sachs, held a press conference alongside members of Congress with the goal of laying out the first objectives for crypto policy. Now, Sachs said at the event that he looked forward to working with lawmakers to create a, quote, golden age in digital assets. Now, the first step of which seems to be a stablecoin bill introduced by Senator Bill Hagerty earlier that day. Now, that bill, backed by Senate Banking Committee Chair Tim Scott, looks to create a clear regulatory framework for stablecoins. Now, also on Tuesday, the SEC's head of a new crypto task force, Commissioner Hester Peirce, penned a statement titled "The Journey Begins," in which she said the agency would work to create more transparent and predictable regulations by removing legal ambiguity and roadblocks. Now, some of those priorities include clarity on which crypto assets are securities, creating a path for crypto issuers to gain regulatory approval, and balancing compliance and innovation. The SEC also said it was creating an open-door policy to solicit input on crypto from the public. Now, after his press conference yesterday, David Sachs joined CNBC's Closing Bell Overtime, where he laid out one of the top priorities for his task force, a Bitcoin reserve.
The item that President Trump asked our working group on digital assets to study is whether it's feasible to create either a Bitcoin reserve or some sort of digital asset stockpile. And so we're going to be looking at that question. We haven't committed yet to doing it, but it's one of the first things we're going to be looking at.
Sachs touted the security of Bitcoin and its position as the original cryptocurrency, which he believes could make it the strongest digital asset in a potential reserve. All right, also happening this week, the TON Foundation's former president, Steve Yun, is launching TVM Ventures, a $100 million VC fund to back startups on the network. TON scored a win earlier this year when Telegram announced that it would make it the exclusive blockchain for its messaging platform. So what does that exclusivity mean for developers on the network and for the startups Yun is looking to fund? I spoke with him yesterday to find out. So you announced the launch of TVM Ventures this week. You have $100 million in your fund, and you're aligned with one of the largest messaging platforms on the planet. Talk to me about what kind of startups you're looking to back and how you're prioritizing your investment strategy.
So TVM Ventures is dedicated to expanding TON blockchain as a global financial network. So given Telegram's distribution power, we believe that through leveraging the Telegram mini app platform, we can put DeFi in every pocket. So I am mainly interested in DeFi and PayFi projects who are making a very scalable version of a DeFi protocol, which can be built on TON blockchain, and also very accessible through the user-friendly interface, but also auto management of on-chain funds type of features.
Walk me through some specific examples of what you're thinking of when you say putting DeFi in your pocket.
So Factorial, which is a lending platform, is quite interesting. They are like a modular lending platform like Morpho, but based on TON's asynchronous architecture. It just means that when this lending gains a lot of traction, it is able to service a huge number of users without resorting to sidechain or network extension or off-chain solutions, which compromise the user security. So DeFi, this type of DeFi project is able to service a mass user base without compromising on security. And second is they are creating a Telegram mini app where there is a market maker behind the vaults that people can deposit their tokens to, and it will be managed automatically without them having to look into, learn how to do the liquidation on the lending by themselves. So second thing is, it's very interesting that there's a convergence between SocialFi and DeFi on Telegram and Ton right now. There are DeFi strategies that can allow influencers to show their strategy to their users, and the users can copy their on-chain farming strategies directly on Telegram Messenger.
What kind of celebrities and what strategies are they sharing? Can you walk us through one example?
So these are platforms. In Ton, we have native influencers, and they could be basically walking through their user base how to get into DeFi. And DeFi is a very scary topic for most. And this is why most of people, even though we calculate 250 million users using Binance, it is difficult for them to use DeFi products. But these SocialFi platforms basically walk everyone through how to use it step by step, and also allow users to, with one click, copy their entire on-chain farming strategy.
Now, in the last 6 months, we've seen this shift where VCs are again training their sights on crypto after a few years where AI startups were taking most of the limelight. After that $1.1 billion bridge acquisition by Stripe, there's been a lot more talk about stablecoin infrastructure companies. What investing trends are you seeing broadly, and which corners of the market are attracting the most VC dollars right now?
So I think that a lot of people are investing into bridges that bring EVM compatibility to non-EVM chains. But I have a strong view on this that chains like Solana and Ton and others are better off focusing on their own chain. And because becoming EVM compatible creates an interesting paradox, but overall, it has a huge risk of killing the spirit of innovation of that layer one community. Because by creating EVM compatible network extension of a layer one chain, it allows basically copy paste of existing innovation in Ethereum to come over. Therefore, why should people in this chain innovate and create something new that can outcompete what's available in Ethereum? Another paradox is the security. Of course, the smart contracts in Ethereum are bulletproof because they've been time battle tested. However, the side chain and the of sorts that host the smart contract themselves are not secure enough.
You're also the former president of the Ton Foundation. Messaging platform Telegram announced in January that it was exclusively using Ton and Toncoin for all crypto and Web3 apps and services. What's the benefit of exclusivity for Telegram? Walk me through the strategy there.
I think it is basically a necessity, not a restriction on builders, because Ton blockchain was designed really to bring a mass adoption and service mass number of users. Ton has a very unique sharding implementation, which allows exactly to service Telegram's close to 1 billion monthly active users. Therefore, it is a good news because it brings a great user experience where the users may not need to worry about their products going offline when there is a traffic. So that's the main benefit that Ton brings to the Telegram mini app ecosystem.
And what's the outlook for development on Ton this year? What does the pace of R&D look like now versus the worst of crypto winter?
So after this cycle is the bull trend is over. I don't know when, but when it is over, we will have 2 years of quiet development time. And here I see a lot of discussions in the community about creating work chains and side chains, EVM compatible or not, faster finality. And I think these discussions will basically go into the research stage and potentially in about 2-3 years, end up being integrated inside Ton blockchain as another blockchain specialized for certain use cases, such as gaming, DeFi, and PayFi.
So we've seen this massive shift in the U.S. where there's now a lot of support for the crypto industry coming directly from the White House. We're also seeing a lot of emphasis on these new crypto councils being formed, trying to craft policy in the United States that caters to this industry. Does that ripple into the work that you're doing?
Oh, definitely. One of the main risks that was perceived by the market about Ton was the risk from the SEC in the U.S., which is why we have geo-blocked the U.S. in every way possible in many years. But I think that a concern has largely been addressed because of the change in administration and also imminent regulatory clarity. So TON is definitely in that conversation in the U.S. So our new president, Manny, was in the crypto ball having conversation with President Trump. So we will continue to do our push to get into the U.S. market. And as a matter of fact, we do have a lot of people supporting TON. So after regulatory clarity, I believe that many of interesting news and different tier one contributors in TON will be announced.
Okay, one last thing before we go. A Senate panel is hearing testimony on concerns around debanking and in part how it might affect crypto. We'll be keeping an eye on that and have more for you tomorrow. For the latest, you can check out CNBC.com. That's all for Crypto World today, but we'll be back again tomorrow and we'll see you then.